The US is the world's military and economic superpower. They house the world's largest corporations, biggest infrastructure programs, and the world's richest people. They have been the undisputed kings for the past century. Yet, as the 21st century arrived, a contender rattled their status. China. China has slowly changed the world as we know it. They have challenged the US directly. Many analysts are now even saying that China is bound to overtake the US in the coming decades. But there's a problem that many fear besides China overtaking the US. It is how China is buying many major American corporations. Chinese money, from its private businesses to state-owned corporations, have poured tens of billions of dollars into American land and are now amongst the most important and vital foreign investors in the United States. So, just how big is the money flowing in from China to the US? And what companies have Chinese money acquired? Well, let's start with some of the largest to date. Let's first start with corporations. Chinese state corporations and private businesses have been active investors into American corporations. Probably one of the most shocking acquisitions made that most people don't know of is into a company called AMC Theaters. AMC Theaters is the largest movie theater chain in the world. The investment by a Chinese corporation known as Wanda Group started way back in 2012 when they paid $2.6 billion to acquire AMC's 5,048 screens in 347 theaters in the US and Canada. Fortunately, by 2021, the deal would close and Wanda Group would exit its investment into the company. Another major investment is done through Smithfield Foods by Shuanghui International, now known as WH Group. Smithfield Foods Incorporated is known as one of the world's largest pork producers. It is a billion-dollar company that has a significant sway in the agriculture industry of the United States. The company was founded way back in 1936, signifying its importance to American history. But the company had fallen into a big problem in the financial crisis of 2008. By 2013, revenues had plateaued, and Smithfield faced increasing pressure from investors to either reduce costs or consider selling portions of the business. One of these investors was Shuanghui International from China. They offered a premium to buy the company. They also offered Smithfield access to the rapidly growing Chinese market where pork consumption was on the rise, unlike the stagnant US market. However, the $4.7 billion deal came with risks. Smithfield ham was a symbol of American tradition, and being acquired by a Chinese company would tarnish its all-American image. Moreover, Shuanghui's past environmental scandals and the broader issues of pollution in China's food industry could harm Smithfield's brand. Yet, the deal went on. In 2013, Shuanghui International Holdings Limited signed a merger agreement valuing Smithfield at approximately $7.1 billion, including the assumption of Smithfield's net debt. Another company is Motorola Mobility. Most people probably know who Motorola is. It's a well-known US-based consumer electronics company specializing in the production of smartphones and other mobile devices that operate on the Android platform. Yet you've probably never heard of it being acquired by a Chinese company. Indeed, Motorola is no longer an American icon, but rather owned by Lenovo. Back in 2014, the Chinese giant had acquired Lenovo from Google. This acquisition, which includes the Motorola brand and its portfolio of innovative smartphones such as the Moto X, Moto G, Moto E, and the Droid series, along with Motorola's future product roadmap, has positioned Lenovo as the world's third largest smartphone maker. Lenovo said at the time of acquisition that it will operate Motorola as a wholly owned subsidiary, with Motorola's headquarters remaining in Chicago. With this acquisition, Lenovo welcomes a new portfolio company, adding nearly 3,500 employees globally, including approximately 2,800 in the US, who are involved in designing, engineering, selling, and supporting Motorola's outstanding devices. The total purchase price at closing was approximately $2.91 billion, including around $660 million in cash and $519 million newly issued Lenovo ordinary shares, valued at approximately $750 million and representing about 4.7% of Lenovo's outstanding shares, which were transferred to Google at closing. The remaining $1.5 billion was paid to Google by Lenovo through a 3-year promissory note. Additionally, Lenovo paid Google approximately $228 million, primarily for the cash and working capital held by Motorola at the time of closing. This was no small deal, but Lenovo itself was a massive company anyway. They were a $39 billion company at the time of acquisition. One of the most controversial acquisitions ever made was into Blackstone Group. The famous Chinese sovereign wealth fund had acquired a 9.9% stake into Blackstone Group back in 2007. Blackstone Group is known as the world's largest alternative asset manager. They have over $1 trillion in assets under management. So okay, why was this deal so controversial? Well, that's simply because the acquired China Investment Corporation, CIC, was a state-owned company. That means the Chinese government owns the company. Think of it as an indirect ownership by the Chinese government into one of America's largest businesses ever. Well, thankfully, the stake was eventually sold off. In the early months of 2018, the CIC divested its stake in Blackstone, marking the end of a contentious 11-year ownership in the U.S. private equity firm. There were no reasons why CIC decided to sell its stake, but this occurred amidst the escalating tensions between Washington and Beijing over international economic policies, with the U.S. administration citing China's trade practices as potential threats to America's economic future. A senior executive at CIC indicated that the stake was, quote, gradually offloaded mostly before Trump's presidency. Despite the divestment, Blackstone continues to collaborate with CIC, maintaining a close relationship with the sovereign wealth fund and the Chinese government. A year prior to the sale in 2017, Blackstone sold Logicor, a logistics and warehouse property owner, to CIC for $14.3 billion. Now, beyond corporations, it is also known that China is amongst the largest landowners in the US. As a matter of fact, it was reported in 2024 that a Chinese billionaire, who has been identified as a member of the Chinese Communist Party, CCP, had become the second largest foreign landowner in the United States. Chen Tianqiao, the founder, chairman, and CEO of the global investment firm Shanda Group, owns approximately 200,000 acres of land in Oregon. Chen was infamously connected to the Chinese government, extending from its CCP membership to holding executive roles in organizations affiliated with the CCP. His acquisition was made back in 2015 when Chen acquired 198,000 acres in Oregon for $85 million, making him the 82nd largest property owner in the U.S. and the second largest foreign landowner. His holdings include Oregon's Bull Springs Skyline Forest, which spans around 33,000 acres and features springs, creeks, timberland, and wildlife. Other than farmland, some Chinese businessmen and corporations also own a few big buildings across the U.S. One of the most infamous acquisitions was one of New York's famous buildings. Back in 2018, the Chinese government seized control of Anbang Insurance Group, a Beijing-based conglomerate that has aggressively acquired overseas companies and properties, including the Waldorf Astoria in New York City. As a result of the takeover, the Waldorf Astoria, which Anbang purchased from Hilton Worldwide in October of 2014 for $1.95 billion, has become directly under Chinese government control. The move had also extended to other properties under Strategic Hotels and Resorts, which Anbang acquired in 2016. These include the JW Marriott Essex House in Manhattan and the Four Seasons Hotel in Washington, D.C., among others. But ever since Anbang was acquired by the government, they had divested several assets over the years. Now, it's not just the buildings acquired by Anbang. There are several more out there. There are deals that may not be really significant to some. After all, America is home not to billions, but trillions of dollars. A few acquisitions worth billions is obviously nothing, right? Well, to some indeed, but to others, it still shows that some major American brands, buildings, and land are owned by China. But above all of this, The single largest investment done by China is through U.S. Treasury securities. This form of investment is on a much larger scale and has significant implications for both countries. By purchasing U.S. Treasuries, China has effectively become one of the largest foreign holders of American debt, providing a critical source of funding for the U.S. government. As of April 2024, China holds over $710 billion of Treasury securities, making them the second largest holder just behind Japan. What significance does this pose? Well, it is often seen as a trust in the stability and security of the U.S. economy, but on the other hand, it gives China substantial leverage in international finance. The sheer scale of these holdings means that any significant move by China to sell off U.S. Treasuries could have immediate effects, potentially destabilizing financial markets and affecting global interest rates. But anyway, do let us know what you think. Thanks for watching.